I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and lots of good things in the middle. We have a ton to talk about. We're going to start out by just letting you see what all of the stocks are that we're going to show charts on this week. Plenty of them along with the indexes. This is our list right here as we look at Silver Stock, PAAS, Noble Corp, Joy, VMware, Union Pacific, FCX in the materials category, along with Cliff and BHP Billiton, Netflix, which got wrecked this week, 3 airlines that did poorly, United Airlines, Delta, and American, Kimberly-Clark in the food category, Starbucks, Las Vegas Sands, Google, and then in our short-term view of the coming week, of course, we're going to look at light crude, gold, the euro, the bond market, S&P 500, and the VIX. So we have a lot that we're going to look at this week. This has been a week that was very interesting for the markets. The stock market, well, it rallied early in the week. We expected that, and it stalled and retreated. There is huge strength here in the face of craters in the market, especially in the tech sector. Overall, S&P 500, small change for the week. NASDAQ down about 2%, so it was a lot weaker. You know, we'll call the bulls, maybe with all these craters, slightly pockmarked, but overall far from damaged as we're see this trouble in tech land not really affecting the market, as there's typical in bull markets of a rotation going on. We've seen financial strong, mining, energy, and manufacturing all picking it up, where these tech stocks have lost it. The FANG stocks, Facebook, Amazon, Netflix, Google, all getting hammered, and add to that Microsoft also, but just absolutely no matter as this market remains incredibly strong. Investors moving out of the safe havens where they like to park money in these food stocks and utility stocks, and then putting it really into other areas, as they think that there will be worldwide economic growth due to some expansion, which is due to come at some point in our lifetime. Japan, they are throwing everything at the markets. Incredible. And that also helped today as we saw them come out and say that they have a 0% interest rates, that they will make loans to growth areas for businesses. They're talking about making that a negative interest rate, so essentially paying to borrow money for these companies or areas that they think will help grow the market. That's not exactly organic growth. It's simply economic manipulation. And talk about that, they're now increasing their ETF buying twofold. So they're trying to push markets up. They're in Japan, over 500% debt to GDP ratio there. It is the ultimate of male investment that they're setting up, and that's, I've said before, the source of the next world crisis is coming out of Japan. Our debt to GDP here, about 320% private and public here in the U.S. So it is another terrible situation, but investors right now ignoring it. But what the Japanese did crack the yen. We expected to see yen go down and dollar strengthen, at least a temporary. That has gold moving down in a correction, but silver and copper, they have been monstrous on the upside, and that has really been helping these mining stocks and material stocks be really strong. Silver at best level up about 9% on the week, now up about 5.5 or 6, as that's giving some sign of rejection. I'll show you that later on when we look at these silver stocks. Copper was up like 7%, now up about 5% on the week. Also giving a little pause to that is China says they want to stop this speculation in this iron ore, the price of steel moving up, which has been really lifting our steel stocks over here. We think those are going to have a setback also, but we have thought that before too. So, but this action that Japan is taking has also helped our stock market here be buoyant in a stock market that remains powerfully strong. Let's take a look here at the 60-minute ES chart, and we'll be able to see what's happened during the week and what the influences were in the market. Take a look here at that chart right now, and there you go. There's that 60-minute chart, 24-hour chart, where you see the gray areas are the overnight and the white area is the trading during the day. You can see right here the Doha failed and a big gap down overnight, which didn't mean a whole lot. Oil breaks 6% and then recovers, and when it really starts to recover here, the stock market explodes in there. It doesn't matter that Citi lowered U.S. growth to about 1% for the quarter, and Kashkari, well, he says that economy in uncharted waters and agrees with Yellen on a cautious approach. Comes Tuesday, well, the commodity market's strong. They lift the markets here overnight. Oil is up near $42. Gold and silver really move up. Silver absolutely surges. European market's strong, but the U.S. markets couldn't really hold it in here. IBM and Netflix probably caused some pause as we got a break, but then they came back later in the day. On Wednesday, didn't have a lot going on overnight. You could see the sideways action. Oil down early, but then the news comes out of a rumor of some meeting again in Russia this time for the producing nations to try to get a freeze going. Oil inventories, they didn't build quite as much as they thought would happen, so you get a big pop up here in oil. Oil trades over $44 on the week, just absolutely amazing. Comes the ECB meeting over here, no change, deposit rate still at -0.4. Can you imagine that? Massive stimulus to continue, as Draghi says he's ready to react again. China edges lower, but Japan up 2.7% as they're really trying to push that market up in there. OPEC comes out and they say that production is actually ready to drop, and that has helped oil pop. But right over here you see oil and gold and silver. They reverse big on the downside right over here. So the market drivers, they disappear and the stock market starts to get a hit. And you could see we got this, as expected, this pullback here later on in the week, even though late on Friday we've had a bit of a recovery in here. World markets were mostly lower, though Japan was strong. Google, Microsoft, Starbucks, Visa, I mean, all of them adding to really weak stocks in there in the technology sector, beating up the market. And then, as you can see, just firms again as the market really strong. Yen cracks, and that was enough to help the dollar and to get gold moving on the downside. So overall, you could see in here, it's the kind of week that looks like it's taking a pause, but that sure is not much of a pause in a market that is immensely strong. Let's take a look now at our economic calendar for the coming week, which has a just massive amount of earnings reports coming out again. You know, if anything we could say about earnings is that what they've done is disappointed in a big way, and forecasts are really disappointing also, I think. And this is just a factor of the fact that all this financial engineering that's going on for a long period of time is finally ending, and they're having a hard time making numbers. But the stock market is looking way past that right now. Question is, how long can it do it? We'll look at that in the short-term view coming up later on in the show. Take a look right over here at our economic calendar, and you'll see the all of the earnings coming out. I'm not even going to name them. I'll just post this up on Slim Talk. It'll be up probably Saturday morning so that you could see all of the earnings coming out. A lot of economic events also. The big one, of course, right over here, Wednesday, 2 o'clock Eastern Time, when you get the FOMC announcement coming out. And that is, of course, a market mover, and high percentage of the time the market goes up after that. So got to keep that in mind. And then lots of other news coming out during the week, but that is the big mover for the week. That is the opening segment for today. Don't forget, check that calendar if you want to see those earnings reports on our list of 330 stocks, which are the major stocks and major movers out there. Speaking of stocks, we'll be right back with the best and the worst. For the best of the week, it was the industrials, energy, and the metals that were the big winners. And it's amazing how strong silver was, like up 6% on the week, starting to give some signs of failing in there, but Hecla still up about 24% on the week. That cheap little stock I talked about in the early part of the year, about $2.50, trades up to $4. Let's take a look at a couple other of my favorites in here. Well, we're going to look at PAAS. AG is another one, up about 18%. Take a look here at PAAS, which is Pan American Silver. Just unbelievable move in here. You could see the cyclical analysis on here, and remember, you can get my charts by becoming a level 4 subscriber. Beautiful cyclical action in here. These are the cycle brackets right there, and you could see the rallies and sell-offs in these beautiful cycles. Here's your perfect basing cycle right there. It breaks out above this level and explodes. Look at this move in here as that stock moves up from $5 to over $14 over here in the last week. This was one of my stocks listed in my 12 best for the year, and man, oh man, that is a home run. Gets all the way up there. We're going to look for a pullback because we've got this failing type action in silver. Maybe for about the next month, it would be great to get down to close to 11 right there, that 38%, and give us a great buying opportunity. But these silver stocks just absolutely roaring, and a great week for them. Other stocks moving to the upside were the drillers, as oil has been very strong. These offshore drillers, which had been the laggards, are really starting to take off. Transocean, RIG, up about 18% for the week. Seadrill up 12%. We have Diamond Offshore up 10%. I'll show you Noble Corp, NE, which had a big move up about 17% on the week, and very, very worthy of a look in here. NE is that symbol, and you will see here in this chart that it has come up to, well, a resistance area. I think that this group doesn't have a lot more on the upside in here, and they've gotten quite exuberant. So this is the pattern that we see in here, and it looks like about a month of correction coming over here. Amazing how that aligns with some of these overdone silver stocks. You know, had this giant burst up over here, but we're going to look for these stocks in this offshore driller category to pull on the downside. In the manufacturing category, Joy Manufacturing had a huge rally. This thing up 17% on the week, and this is with Caterpillar having a huge miss. This is in the mining equipment category. This is an interesting one to look at also. Of course, all of the cyclicality showing up in here. It gets above this cycle peak, which is right over here. That says major bottom is made. In other words, this whole downtrend in here is now becoming this uptrend in here. And that says, well, after the next correction, it's likely going to be a strong buy. We see it correcting here out into June, and there's some sign of that when we look at the daily chart. We'll look at the shorter term, and you'll see a classic pattern in here for candlestick traders. Let's get even a closer look, and you can see these three high waves. You see those long wicks there as it fails and leaves these three dojis, almost gravestone dojis. dojis, and that says that the rally is, well, dead and likely to get a pullback. Support area in the 1770 to about 1850 area in this stock. It's now trading at 2070, so we think there's a good pullback here coming in there. Caterpillar, that one looked like a pretty good miss in there also. Let's take a look at some other stocks and other categories in here. VMware looking like a giant move here of 13% on the upside. Note that it gets up to this 34-week moving average. That tends to be an important moving average on many stocks. This one, it kind of dances through it a lot in there. What really got the stock moving was not so much on earnings, much more on the fact that, well, they're going to buy back $1.2 billion worth of stock. Take a look at the shorter term pattern in here, and what I want you to see, we're always looking at momentum, and that's what our rankings and setups are about, is momentum. Here's where the momentum turned positive, and you can see it's been green the whole way in here. A little fake out where it turned neutral there and then green again. And then you have the breakaway gap and the huge volume on the news that they're buying 1.2 billion shares of $1.2 billion worth of shares on that breakaway gap. So that is a good pattern, and this one you continue to buy on downticks and maybe move a little bit away from that 34-week moving average. Union Pacific, UNP, take a look in here, and you will see as this thing comes up. Let me switch it over to the weekly pattern. In UNP, it's been in this rising cycle right in here. You can see the small one right here. You see that? Look at how nicely that formed, and then gets into the next rising phase and explodes up into the resistance zone right over there. Big 9% gain on the week. But the daily is up in the top of this resistance zone right over here, and this is likely to be in a spot where it stalls. Note for our people that had rankings and setups, we had it as a long setup right over here as it got into the support zone right around that 89-day moving average, and then positive momentum comes in and it blasts off. But this is the spot where we really think it is going to give some ground from there. We get a pretty big move also this week in the material stocks. FCX, CLF, and BHP Billiton. That's a good representation of them, up like 10 to 12%. Big gains in there. I want to show you all three of those in there, because these are really giving signs that they are ready for pullbacks also. You've had this giant move in all of these mining and materials, and it's really time for them to rest. Take a look at these daily charts. We're going to look at FCX, and you're going to see some very classic patterns in here as they get up into resistance. Here is Freeport, and based on seeing this in the resistance zone, this is a classic bearish engulfing pattern right there. We expect it to pull back to that support zone under $9, and that, these have had massive runs in here and very strong upside momentum. And now we think that's going to end. Momentum's still strong in here, and we'll be waiting for another sign. But FCX, that topping pattern says trouble. CLF, you're going to see similar patterns in all of these as that classic engulfing pattern comes in here also. And this thing has been positive momentum the whole way up. Anytime you see my colored bars in here, the volume bars green, you know that the momentum is up. The slim ribbon colors the volume bars for you to see, and they turned green way back over here with the stock under $3, and the stock runs all the way up close to $5. So it gives that sell zone right there, that sell signal, and that's trouble. BHP Billiton, another one to look at, and you can see that same engulfing pattern right there. It also has a huge disparity index, which means it's gotten far away from the 13-day moving average, and every time it does, you can see, well, it comes back underneath the 21-day as it did right over here, and we won't be surprised to see it pull back right over there. So BHP Billiton, Cliffs, FCX, pretty much the same type of pattern, very toppy, and looking like they should have pullbacks. Just one more to mention, Devon, DVN, we've talked about that one as it made an important head and shoulders bottom and just blasted off in there. That's in the natural gas category. The inverted head and shoulders target in there is at 40. We think it'll pull back a little bit, and we think it's a buy. That's it for the best of the week, and we'll be right back with the worst. Worst of the week, the winner, Netflix, as it plunges 13% on the week as its subscriber growth disappoints. And this stock really hammered, and it's a stock that we've been negative on, and we're thankful to say that this was listed in our rankings and setups as a stock with a bearish or short side setup. So absolutely phenomenal in there as far as the move goes. The Netflix, you could see here on the weekly chart, just a little explanation of these patterns in here, and you can see there's a big pattern and small patterns in here. That red dotted line shows you the declining trend in the big pattern. We've had that there for a long period of time. Beautiful rally right up to that resistance zone right over there and rolls over and fails. You can see this declining period right here, and that's this big decline. We expect to see lower prices in Netflix as it is clearly under attack from Amazon, and we think Netflix is finished. Big major top in there and a stair-step downward pattern that we expect to see in there for months. You can see this low comes out towards the end of summer, so we think down in here into sometime May, June, a crummy rally, and then another wave on the downside, setting up to the stock potentially being well under a $70 stock. So a lot of analysts out there still have much higher prices as their targets. I think they're way off. So Netflix, a big decliner in there. The next, oh, by the way, this was listed on our riskiest 12 for 2016. The next thing we're going to talk about is Royal Caribbean as we talk about stuff in the transportation index, down 11%. And this stock really looks like it's got some risk in there. And it's amazing that it's falling all the way down before earnings, which comes out on 4/29. So this really has got a surprisingly bad pattern in there. Airline stocks, staying in transportation, they're big losers. You know, they've had this great period of cheap oil. Problem is that, well, I mean, they're making earnings okay mostly, but all of them are talking about much lower passenger revenues going forward. So they're guiding down on this stuff, and that's really putting a lot of pressure on these stocks. Biggest loser, Hawaiian Air, down 12%. Not one that I show very often. I'm going to show you three of them right now that are lining up in our patterns really nicely to the downside. First one we'll look at is United Airlines, down 10% on the week as this falls right through a support zone with still a little more time to fall in there. So you can see in there are two different cycles that we look at, a bigger one and a smaller one, and this one pointed to a decline in this period, and you could see it right in here. Maybe another little bounce, some zigzag in here is what we're looking for, and not particularly good pattern in there. So you can see that topping comes right on the top of that resistance zone. Delta, take a look at this one, down 8% on the week. This one has our colored phasing in there, and green, of course, rising phases, and the yellow is declining phases, and now it's just set up for this like whole period over here for Delta to be a difficult time. It might stay in this range overall that it's been in. This is not a highly volatile stock, but we could see this stock easily down around $40. So another bad pattern in there. And we had an earnings beat from AAL, American, but then they talk about lower passenger revenue also, and then you get this big decline in here. You could see our cycle projections in there point to this decline being in here all the way throughout into July. After that, it potentially could turn up, but you can see in these airlines, they are really set up for some difficult time. Last week, week, when we did the worst of the week, I had mentioned that the patterns in food and beverage stocks, they were very worrisome. I thought they were rolling over. They really have pulled over on the downside. Down on the week was General Mills, Kellogg's, Coke had bad earnings, and Pepsi, they moved to the downside. I talked about all these stocks. I'll show you one, KMB, that is down 7%. That was the worst one of the group this week, and really set up nicely for this decline. Here's the weekly pattern in here, and this decline that it's in gets down near this 34-week moving average, which doesn't really tend to be a strong support on this stock. You can see that it rolls over very early in this pattern, and you've got all this time to decline out towards the end of May based on that. And just, you can look at the beautiful cyclicality in here as it follows these rises and falls. When it rallies most of the time and has a minor decline, it's bullish, sets it up for another rally right in here and a minor decline, and then a minor rally and fails, and all of this time to fall. That's how we read the cycles, and that is a bearish look. You can see in here at the daily pattern as you have this huge breakdown. This is what we looked at last week, that engulfing pattern right there, and we just talked about engulfing patterns, right, on the stocks that rallied in the materials, setting up for declines, and this one now set into some negative momentum and could be bad for quite a long period of time. Let's switch back over to the weekly. We'll put up LVS, Las Vegas Sands. They had a big earnings miss. Analysts all over these on a downgrade. This is what the cyclical patterns look like in here. Look how it comes right into the resistance zone. Here is the basing cycle right in here, the rally to a new high, and now correcting. You can see that right in here. We believe this support zone in about a month, sometime in May, is a major buying opportunity. And then after that, we expect to get a good lift in here. Wynn Resorts really looks still like a powerhouse to us. Take a look at Starbucks in this category of food. I meant to show you this in the food and beverage, and this one is also rolling over. I want you to see how these patterns look in here. Starbucks down about 5% on the week, so they have a couple of issues. First of all, these safer haven stocks, like the food stocks and all that, well, when the market is strong, they tend to they get liquidated because people want the money out of them to invest in other things. So look at the pattern in here, and you can see these small patterns right there. So rally, sell off, rally and fail fast and sell off. Here it is right in here. And that issue for them is the input cost of coffee, which is really strengthening. So that could be a problem. We'll look for an attempted bounce in here, and then after that rolling over here with lows out in June, July. So Starbucks, not a great looking pattern also. But we have to end this by talking about Google, Googl. Before I put that chart up, just want to mention that I posted something before earnings on Seeking Alpha and also in Slim Talk. That's our blog. You can go click in the site and Slim Talk or in Seeking Alpha and see that we put up there, we thought that it was set up for a big decline. Now, we have believed this stock had been negative, and it had it for a long time as a short side setup, really poorly timed. But the pattern was so bad, I really had to write about this thinking that there would be something very negative. Here's that Google chart, and I'm going to show you what a big topping pattern looks like in there. I actually think that Google is finished and that the major growth is behind it, and we're going to see much lower prices in there. This is a potential major top forming. You actually can see a big potential head and shoulders in there, or what we call a diamond pattern. Now you can see this diamond shape right in here, and potentially having broken down already in that diamond, as that this portion of it was a big bear flag. We had thought about that all along. This big engulfing, this big red zone that we're pointing at right in here, really said to us that it was going to move to the downside. downside at some point. It really held up for a long period of time as all these analysts just are piling on it, bullish. And now we have it breaking down into the June month in here, and then probably trying to rally and then down again. I would not be surprised to see this stock testing the 600 level before you know it, way down over here. Well, sometime in the summertime, or certainly this year. We think that Google is really done. Take a look at here, and you can see this in this shorter term pattern in here in Google. The engulfing pattern that came right here is what had us really believing that it was over with at the top of that upward rising channel. Now you could see the breakdown right in here, and the upward momentum, which was established right here, now ending right there. This is a support zone between 720 and 735. It could dance around in there a little bit, but we don't think it's going to last long. And we think Google is a stock that is in serious trouble. I think rebounds in there are a screaming sale. That is the worst of the week. I'll be right back with a little special peek at our rankings and setups. I'm going to take just a couple of minutes to tell you about our Level 3 membership, rankings, and trade setups. This is a very unique service. We've created a list of the 40 best traded stocks and also added in the best traded ETFs and futures. Total of about 71 symbols. These are really the best for swing traders, option traders, and our rankings and trade setups. In there, we give momentum rankings for 3 different time frames. So it's really good for investors, swing traders, and for option traders. Our goal is to give you high quality setups, really raise your probability of success as you enter into trades. I'm going to show you the page where that is for members, give you an idea what this looks like. So here is that page right there in our website. You can see our website right there, and rankings and trade setups. I'm going to scroll down in there so that you can see what we have in here. The top is the description, all the information about it. And then in the middle part of the page there, it shows the legends and how all the colors work for the setups and for the rankings. And then you get down to our actual rankings and setups, a table that we have. Just a quick description of that here so that you can see what we have is a long-term, intermediate term, and short-term rankings, and all of the symbols. These are all stocks over here, and when you get all the way down to the bottom, there's ETFs and futures, 71 in total. And then every single day we put up, if they're there, our trade setups, and they show up right over here. When we make a change, we put a little check mark over there, and when we put up a new trade, then we put some stars on them right over here, and you'll be able to see that. But this is really a very, very unique service that I would say, I don't know anybody else that has anything similar to this. And people that are Level 3 members, and of course Level 4 that get our charts, get these. So what our goal is to give an analytical edge, and also that gives you a psychological edge, because if you get into a trade and it goes wrong, a lot of people get triggered by things going wrong. Well, we feel like if we can get an analytical edge and improve on the entry, then a better chance of making money and less chance of some psychological trigger hitting us because we've had some trades go bad. The goal, of course, is to get better than what is the typical 50-50 that a lot of analysts get, and a lot of people claim that analysts get. What we look at is zones. In other words, areas where we think there's a high probability entry, longs and shorts, and also look at timing based on our cycle analysis. For our first 110 setups, we really waited a long time again to give this report. What we look for is an opportunity for profitability, a decent opportunity for profitability. Our record is, of the first 110 setups, 70% of them have given that a good opportunity for profitability. 30% have not, but 70% versus 30%, that is really fantastic, and it really gives a great edge for as far as putting on trades and not getting in trouble, and of course having the ability to make a profit. A couple of testimonials that people sent me. Keith M said, my overall experience in rankings and setup has been very positive. He says, good success with several futures trades right in a row. Aaron D writes, and he says, this really helped me a lot, rankings and setups. Big difference in my trading. You can become a level 3 or 4 member and get this. And right now for this week, if you write to me to slim at askSlim.com, I'll send you a special link that you'll be able to sign up for 14-day free peek. Don't miss this opportunity. You're really going to love this product, and of course everything that we put out in our videos and our charts. Send me that email and I'll send you a link. And thanks for listening, and here we come with the next segment. All right, short-term view of the coming week. This is where we look at only the daily charts. We take into consideration the intermediate patterns, but we're focusing on the shorter-term picture here as we look at the next week or so, maybe a little longer out there. We always want to take an accountability of how we did in the previous week. That's really what this is about, is really saying where we blow it or where we're really strong. This week, we're going to say conservatively we were about 70%, which has been a strong week for us. We'll take a look at light crude, gold, the euro as the proxy for the dollar, the bond market in the 10-year, and the S&P 500 and the VIX. So last week we expected light crude to we weren't sure about the Doha meeting, of course, and we thought no matter what happened, the market would rally early in the week. In other words, if there was a failure of the meeting, it would open lower and then have a rally and then pull back. Well, that's mostly what we got. We're going to only give ourselves about half credit in there because it rallied just as we expected, but it hasn't really pulled back yet. We actually think that's coming in there. So let's take a look as we look at the light crude market to start on this daily chart. /CL is the light crude market, and get this one up for you right here, and you can see basically what we're looking for in here. We thought that the market in light crude would start out with a rally early in the week. You could see it had a gap down in here on the Doha meeting, but it didn't really go that far. And you can see that you don't even see the overnight trading in this one because I don't have it set up in there. So it was a lot lower and rallied early in the week as we expected, and we expected to get a pullback. And that pullback you can see is in really just looks like it's starting right in here, and we think it will be in the next week that it's going to have a significant pullback. We're actually looking for a pullback to this minor support area. We're going to look at this upper level right over here, about 40.85. That's the 38.2% right there. It's a little bit below or in that slim ribbon right there. So that's what we think. Really the next 3 to 5 days of pullback. If it pulls back sharply early, it'll probably do something like this and get a bounce in there. The following week after that, it looks like it's a more favorable period again. So we're just looking for a pop down in here to 40.85 or a little bit lower, and then moving back to the upside after that. Gold market /GC, we expected a rally to come and fail more in that sideways correction period that it's been in. We're going to move this out now to a 2-year daily so we get these cycle alignments proper. And now you could see for our subscribers, we have all of in here. This is the silver cycle, this is the GDX cycle, This is the gold cycle, so we have them all labeled for them. We expected that a rally would come and fail, and you can see that's essentially what's going on. As we have a $15 down day today, it was down about 20. We're expecting very similar to what we see in light crude. And you can see these patterns in here, GDX and gold pushing down. We expect this week for 3 to 5, we expect 3 to 5 down days, really right in here. And then the following week turning up and then turning down again as we finish this corrective period. We're looking for ultimately down around the 190 area, 1190. We're still looking for that. You could see the shooting star pattern in there as it tried to rally and failed just above that 78.6 fib, and that's really the sign of this topping. So we're looking for this. So we'll call it 1208 to 1188 as the area we expect it to fall down to, and then moving back to the upside following that. So really small change on the week is what we're looking for as we get just some modest downside correction in there. The euro currency, we said another down week to test support zone, and the support zone we gave was 112.37 to 111.68. So we're going to look at /6E. So 112.37 was the top of that support zone that we were talking about, and you can see just about a bullseye as it comes down and touches it right over there. We're looking for this pattern right in here this week. So, you know, the dollar got strong, you got help from Japan in there, and because against the yen, it really exploded on Friday. And we expect just a couple more down days in here and then a rally coming in here. So it could get down and test this area of about, we'll call it 111.70-ish, the bottom of that right there. But really just a couple days down and then back up. We're only looking, again, for a small change in the euro currency in here. Down up is what we're going to call it. The bond market, /ZN, is what we're going to look at. We were looking for rolling over, and we said that there were big risks in here of failure. The intermediate pattern was turning over in the bond market. We're only going to get half credit for this, honestly, because the rally that we expected didn't really come. You got a little pop up here on Monday right there, but then we thought it would follow through a little bit and then roll over for a big decline. Well, the big decline actually started. This is big trouble right in here, and we're actually expecting a major decline in the bond market. For those of our members that saw our videos during the week know that we're looking for some much lower prices in bonds. And the way this shapes up on the short term, you see this pattern right in here, and that is likely to get you a bounce right there. So you could see it pulling down right in here, and then after that, some little attempted rally. So you see what we drew in here? This actually turns down already. We don't have that redrawn in there properly. So what we're looking for is, I might as well grab this and show you that this actually turned down already. So it now looks like this right there, and then activate this and pull this right over here. So that's the pattern we're looking at. A little bit of a bounce here in the next week, and then after that, getting into these. Let me just grab this and getting into this kind of a pattern right over here. So it's this rally and this sell-off, and that says to me, if you get this rally in here as we expect, this right here is a screaming sell for a big decline. So a big short side setup coming if we get a bounce here in the bond market. Can I make that any clearer that I am massively bearish in bonds and think that any rally that you get in there is a sell-off? All right, S&P 500, what we thought was it would test resistance around 2088 and then roll over and fail. It did better than that. I got a little bit higher. We said that the cycle was rolling and it was going to go into a correction. We thought we'd get a small change on the week, and we're right just about unchanged on the week, and that it sets up for a further correction for 2 weeks. That's what we said last week. Well, this minor decline started, and we think that it has got this next week to go in there, and then after that we think we're going to be rallying again. So it's only really a minor correction that we're looking for here in the stock market right now, and then potentially setting up a more, we'll call it complex topping structure in there that you'll see how this sets up right here. So this is the S&P 500. Now, we expected that around 2088, which was resistance, that was right around over here. And it got up through there and then started to give these failings. So you could see the evening star that formed in here. This number right over here at 2114, we thought was going to be tough. It couldn't quite get there and then started to roll over. So this is really what we expected, this pattern, and we got it. Just the one a little higher than expected. Now what we do is expect this next week, we're going to call it 4 to 7 days to come down into this support zone. So I just drew it as a straight line. It does not have to look like that. You can see it gets support here at this right in the slim ribbon. It continues to do that throughout this whole rally. You can see this 19-day low just hits the 13 moving average. This 19-day low hits the 21. We're expected to get down over here. Now this support right there is right around the 2072 number down to 2063. We do not expect it to get any worse than that in this decline. So that is a very modest pullback in here. So it could chop around in here a little bit, get down into this area over here, and then move up again. And we think we're going to get another test in this big confluence area above the 2114 number after some gyration in here and a minor pullback. As far as the VIX goes, we think the VIX is in a bottoming process. Implied volatility, it's still working here sideways, chopping around, and like we just said, we thought it had another week to go in the stock market of correction, maybe get a little pop in here, then you get that another rally in the stock market, you get another dip in here, and then out over here sometime mid-May is when we think this pop in implied volatility is going to come, and the stock market has bigger risk out there. So right now for the S&P 500, for the stock market, we are looking for just minor pullback. We'll call it 2072 or a little lower in there in the next 4 to 7 days, finish this corrective period, and then rally again. That is it, man. We covered lots of stuff. I hope you loved it. Don't forget, I gave out my email, slim@askSlim.com. If you want to get this special, only for the next week, we're going to offer this now, of a trial. I'll send you a link and you'll be able to get a peek at everything that we do for the next couple of weeks, and I think you'll love it. We have rankings and setups, great opportunity in there to really raise your odds of success. That is our goal. We hope you love everything that we bring to you. Let us know. Hope you have a great weekend, a great coming week, and we are always wishing you great trading.
Well, I'm going to the city and I'm gonna do a silly show.